All right, welcome to Talkin Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk about the market. I want to talk about two stocks in particular and the direction the market is moving in, because I think something different is happening today. I think something special is happening today, and I think we are in the midst of a rally. So I want to show you what I'm thinking. If you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, it helps the channel out a lot. Lastly, if you're interested, you can join the channel and become a member and get some members-only content. We also do a once-a-week members-only live stream every Tuesday. You can do that by hitting the join button on YouTube, and if you don't see a join button, then you can hit the link below. Okay, I want to talk about the market. Something very unusual is going on today. Something different is going on today. There are two massive stocks that are tanking, yet I'm calling for a rally, and I want to walk you through what I'm looking at, and I think you guys are going to agree. I did a video early Monday morning saying the two big days this week were after hours on Tuesday and after hours on Thursday. Well, after hours on Tuesday, Microsoft and Google reported. Now, those are the number 2 and number 3 largest companies in the United States. On Thursday, Apple and Amazon are going to report. Those are the number 1 and number 4 biggest companies in the United States. So that's the top 4 companies right there. Typically, particularly over the last year, if any of those companies had missed and had a bad earnings report and the stock went down, the market would get dragged down with it. We have had nothing but red days on a day where we've had a miss on earnings and a stock has tanked. Well, we've got two stocks, that one of which that missed, the other one had a gloomy forecast about the fourth quarter. They're both down 5 or 6% today, yet the market is rallying. To me, that shows a sign of resilience we have not seen really in the year 2022 at all in this market. And I do think I've been calling for, those of you who watch the channel, I've been calling for a relief rally now for 3 or 4 weeks. And I think we're finally in the middle of it. Okay, first let's take a look at where the markets are. And this is the middle of the trading day, so I don't know where we're going to end today. But the S&P is up about 0.5%. The Dow's up almost 1%. The Nasdaq is down 0.3%. And the Russell is up over 2% on the day. So the Russell, the small cap high growth stocks are booming. The risk on trade is big this week. And I've seen some moves that are staggering, 20%, 30%, 40% to the upside. I have one stock that I follow that has had back-to-back days where they were up 35% each day. That was Argo Blockchain, by the way, in case you're wondering. Okay, so you can see we're mostly sideways. The Nasdaq is down just a little bit, but we're looking at Google, and Google's trading at $98. It's down 6.5% today. So that's one. Google is the third largest company in the United States. It's the third largest company in the Nasdaq. And then if we switch over to Microsoft, you're going to see they're down 5.5%. They actually beat on revenue, they beat on earnings, but they did have something a little bit negative to say about the fourth quarter. And so, knee-jerk reaction, in my opinion, this stock is way down. And really, I think both of these moves are over-exaggerated. But the good news is, while these two giants are getting beaten up, the stock market is holding on. The Nasdaq, I would not be surprised at all if the Nasdaq ended up in the green today. It has been going up all day long, so it's already moved up substantially off its lows. It's getting very close to zero. So if Microsoft and Google had disappointing earnings, and they are both down 5 or 6%, and the Nasdaq ends the day in the green, to me, that is a gigantic confirmation that we are in a relief rally at least. Okay, just to show you real quickly, here's an article on Microsoft. Microsoft stock dips despite beating Q1 earnings and revenue estimates. So they beat on earnings, they beat on revenue, so you would think that this would be a good quarter. But again, a lot of times it has to do with what they have to say in their forecast. And really, as I read through this, I have not listened to the conference call, but as I read through this, I did not think that this was a very gloom and doom report. They're reporting a little bit of a slow in their rate of growth, but they are still growing. Essentially, they reported that their cloud-based business, which is a growing part of their business, the rate at which it's growing slowed down quarter over quarter, and they're forecasting that's going to happen in the fourth quarter again, but it's still growing. I think they're forecasting 37% growth. That is still huge growth. It's just less than expected. Microsoft is a machine. Again, they beat on revenue, they beat on earnings. I mean, I don't know what the market wants. However, the whole point of this is that the market is withstanding this and holding up and actually having a good day. And in a completely different sector, in the risk on small cap high growth stocks that have been absolutely decimated over really the last 16 or 18 months. All of a sudden, we're seeing those have back-to-back very big green days. Some huge moves to the upside on the risk stocks. So it looks almost like money is coming out of these two big companies and starting to shift over there. Now that makes sense to me because the small cap high growth stocks were the first thing to get taken out. They started getting taken out in February of 2021. So long before the market really started to take a downturn, the small cap high growth stocks have been in almost a depression really for the last year plus. So it could be now this is a signal that we're starting to see things, that which led us into the recession is usually that which leads you out first. So potentially we're seeing a bottoming out in some of these small cap high growth stocks, and they are starting to recover in a big way. But at the same time, some of these big stocks are taking their final blows. Now we have two big earnings on Thursday again. So we have Apple and Amazon to go through. However, I am now less worried because the market was absolutely disappointed with Google and Microsoft. And if we look at Google, so Google misses on expectations as YouTube ad revenue comes up short. So Google missed on their top line. They had revenue of $57 billion. They were expecting revenue of $58 billion. They earned $1.06 per share. They were expecting $1.25 per share. So just to understand, Google has 6 billion shares outstanding. So that means when they made $1.06 per share, they made $6 billion in profit this quarter. So yes, that is a miss. That is less than the market expected, but let's not get carried away. They made $6 billion of net income. They had $57 billion of revenue. This was a very strong, healthy quarter. It did miss expectations. So, okay, they're getting beat up a little bit, but you can see the overall market doesn't care. So I want to look at a few of the charts of the market. This is the SPY. This mirrors the S&P 500, which is the broadest measure of the stock market. This is the one that most people follow. The S&P is now up almost 11% off of its lows from just 2 weeks ago. So that is a very strong move to the upside. Momentum is on our favor. If I look at the daily RSI, you're going to see we crossed 50 during these 4 green candles. We crossed over 50, which is neutral, and we are now on the way up. So this is a very strong signal that this rally should be continuing. Now, obviously, nothing is a given and anything can happen. So as always, be careful investing. And this is not financial advice, but you can see the same thing on the MACD. This is on the 1-day time frame for the SPY. The MACD had a bullish crossover really back on the CPI data day, and it's been building momentum ever since. So these are very strong indicators. I want to look at the Nasdaq, and then I want to show you the other indicator that I think is the most important one out of all of them. 2 of the 3 biggest companies in the Nasdaq are having a huge down day, but yet the Nasdaq overall is down just a little bit on the day. And again, I think it's going to end up green on the day. We'll see what happens. But once again, if we look, the Nasdaq crashed in the morning of the CPI data a couple of weeks ago. That was the bottom. And we're now up 11% on the Nasdaq. So the Nasdaq's up even a little bit more than the S&P 500. So both of these are performing very strongly. This feels like the middle of a typical 20% relief rally. So all the indicators are pointing towards that. So I want to stress again, that doesn't mean it's going to happen. We've gotten the first half of this rally. I think we're going to get the second half of this rally. I've been waiting for this. I've been calling for this for over 3 weeks. It looks like we're finally in the middle of it, but you never know. Any geopolitical event or any surprise outside of the norm could prematurely stop this rally. So you always have to keep that in mind. But if we look at the RSI, same thing. We are over 50. We've had several days now building momentum over 50. The MACD had a bullish crossover on the day CPI data came out. That is the day we hit our low. We had a bullish crossover. We've been picking up momentum ever since, and it seems like we're still headed in the right direction. So all of these things look like we're headed in the right direction, and that this rally has some legs and stands a good chance of continuing. Now I want to look at the DXY. The DXY is a measure of the dollar against other currencies around the world. This line down here, there's a green line down at 103. That was a 20-year high on the DXY. So you can see back in June, we took that out. That has now been a level of support, and we have been headed up ever since. So we're at record levels over the last 20 years on strength of the dollar. So at a first glance, that sounds like a good thing, but it's actually very bad for the stock market. So there's typically an inverse relationship here. So as this continued to go up and up and up, and we then broke our 20-year high on this, you'll see there's a blue line up here at 121. That's about 22 years ago. There was a gigantic spike. So that's the last time we've been in this type of territory. It is starting to look like we may have topped out. We got to just about 115, and then we leveled off. I had a green line here that was support. So we went below this for one day, but the next candle was right back above it. So we had a nice period of time here for almost a month where that was support. And now you can see we have moved below that and we're having big red candles. So the dollar is weakening. It's under 110 for the first time in over a month. It's at 109, and this is still a very, very strong dollar. So it's not like it's a crisis that the dollar is weakening. Again, this green line at 103 is the 20-year high on the dollar prior to this run over the last few months. So there's still a lot more room to the downside, and the dollar would still be at very historically high numbers. So, if we can take this run from 109 down to 105 or maybe even 103 on the DXY, then we could have a very, very nice relief rally in that period of time. And it looks to me like that's what's happening. So I'm looking at the big picture, and all indicators are pointing to good things ahead in the short term. And I want to reiterate, I'm talking about a relief rally. So, those can be 2 weeks, those can be a month and a half. I'm not saying we have flipped into a bull market and it's all uphill from here. I am not expecting that. I think there's a lot more bumps in the road ahead. So again, that's why I say this is not financial advice. Please do not buy or sell anything based on what you hear me or any other YouTuber say. But I did want to point out all these trends to everybody because I think they're very strong trends. And I think to watch a Google and a Microsoft really have a horrible day and watch the entire market rise despite that's an event we haven't really seen in the last year. So I'm encouraged. That's what I'm looking at. I'm looking for the rally to continue. We'll see what happens. I will check back in and stay tuned. Later today, I will have my Bitcoin update. So remember to subscribe to the channel and smash the like button. Thanks so much for watching, and we will see you in the next video.